I'm just going to get us started here in the interest of time. Thank you all for joining us today and welcome to the Crop Insurance and Risk Management webinar. This webinar is being recorded and so it'll be shared with you afterwards. If you have any questions during the webinar, please use the Zoom Q&A function on your toolbar. We'll do our best to address your questions as they arise, but if they aren't addressed during the presentation, we'll get to them at the end during the Q&A portion. This webinar is made possible by the USDA Risk Management Agency's Risk Management Education Partnerships Program. In this webinar, we will focus on crop insurance and risk management strategies for small to medium scale diversified farms. Katie will walk through the whole farm revenue protection and the microfarm program and highlight how these tools can help farmers protect their income and manage risk. Katie is from Toombs County, Georgia, a graduate of UGA, specializing in business and marketing. She has been in the insurance industry since 2010, and since 2017 has been solely specializing in crop insurance. She has been with AgSouth, meeting crop insurance needs for almost a decade. AgSouth Farm Credit is an agricultural lending cooperative owned by its member borrowers and is part of the nationwide farm credit system. AgSouth provides loans for land, production agriculture, farm equipment, crop insurance, leasing, and home mortgages. And so with that, I'll hand it over to Katie.
Thank you, Lydia. So I assume everyone can still hear me okay since we've officially started the webinar, just making sure before I get going. But so like Lydia said, I am from Toombs County, Georgia. So you might not know the county. I'm near Vidalia, Georgia. That's like the Vidalia sweet onion. So I am working from home today. So you guys get the pleasure of seeing me in my home habitat. And anyway, I just appreciate the opportunity to be able to sit down with y'all and maybe answer some questions, provide some education. If you do have a question, you can go ahead and send it in. And what we'll do is when we get to the end of the topic, we can, answer any questions. And if you have any you want to save to the end, I do have time dedicated for questions at the end. So I'm going to go ahead and share my screen so y'all can follow along with the presentation. Give me just a moment to get that going. Okay. All right, so here we go. Welcome to your official whole farm revenue protection and microfarm program grand tour. So I know that a lot of you did indicate you did have interest in a variety of insurances, and maybe whole farm, maybe microfarm didn't pop up as some of the things that you were looking for. But I think this is a good tool and a good information for a variety of folks. So from here on out, just a quick disclosure, I may just say, I'll either say whole farm revenue or I'll say WFRP. That doesn't roll off the tongue as well. So I'll probably just stick to whole farm revenue throughout the program. So what exactly is whole farm revenue? So as you can see here, I've listed out a variety of things that you could consider that it does. Primarily, I would really consider this as a risk management safety net for my farm. So what you can look at it as doing is covering all your farm commodities under one policy. So how's that different? Well, with multi-peril crop insurance, which is regulated and provided for by the RMA, the Risk Management Agency, which is a division of the USDA, they offer several different policies. And so for commodities such as, let's just say you're a row cropper or an onion grower, you can have an individual underlying policy on just that one type of crop. So there are gaps in that. For example, here locally in Toombs County, we have people who grow watermelons and sweet potatoes, broccoli, various greens, and we don't have a multi-peril crop insurance policy that covers those type of items. So that's where whole farm comes into play. So, you can have coverage on your underlying commodities if a policy is available, and whole farm and just have like a massive umbrella policy that covers everything. But whole farm is especially important for those commodities that don't have underlying protection otherwise. So perhaps you do vegetables or something of that nature, and this is going to more fit those needs for that gap that we could call it. So it's available in all 50 states. It's going to protect against insured revenue loss. And notice I say insured revenue loss because, and we will go into this, there are versions of acceptable revenue and revenues that's not acceptable to be included to be insured. And they also point out from unavoidable natural causes. Now, there is a policy that lists all of these out in detail. If there's any interest in anyone wanting to read the policy from start to finish, I can send you the link to that or the PDF. So I know I didn't specifically list them out here because, we're really getting into, the exact details where I'm just presenting a random, rather an overview here. So the policy will either run by a calendar year or a fiscal year, and that's going to depend on you and how you file your taxes. So who's eligible? So you must be eligible to get federal benefits. You have to be a U.S. citizen or resident. You have to file a Schedule F. And maybe you don't file a Schedule F. There can be versions of different tax forms that can be converted into a makeshift Schedule F to meet the needs for the policy. There are revenue limits. It can insure up to $17 million. And there's different limits that apply based off of different types of operations. So as you can see, I've listed some of these examples: $2 million for animals, $2 million for nursery, max 50% resale value. So what does that mean? No more than 50% of your revenue can come from commodities purchased for resale. So let's say that you're an operation who sells fruits, but you don't grow apples. So you buy apples and resell them. So that can be included. However, your entire operation can't have over 50% of your revenue coming from your commodities that you purchase for resale. And I have just a simple note here that you have to meet diversification requirements. This is another one of those things where we're talking large policy language. They have diversification requirements for commodity counts. So depending on how many commodities you have, you end up getting a diversification discount. That's all included in how the premium's calculated. For those who want more information, that's more of a one-on-one discussion to talk about that because there's charts and everything of that nature. So let's talk about some more of the exact coverage details. You can think of this as being able to cover pretty much all commodities. There are some exclusions: timber, forest products, pets, sport animals, show animals. We can't cover that. And like I said, it does include the commodities that you produce and commodities that you resell. So it does give you a little bit of ability to diversify what you're actually able to bring in as insurable revenue. Surprisingly, you can go all the way up to 50%, all the way up to 90% coverage level for whole farm. However, we can't do CAT coverage. That's that catastrophic coverage that is offered on a lot of the multi-peril policies that I've been discussing that are underlying. Replant coverage is available. This would be on certain commodities that may need to be replanted through the crop year. There is specific language on that as well. There are also going to be maximum farm approved revenues that will apply based on the coverage level selected. Also, this is one of those things that's, chart based, that shows you based off your coverage level what that max farm approved revenue that you can have is. And I think that Lydia is going to be sending out some fact sheets, and I think that this chart is in the fact sheet, so y'all can reference that there. So under Whole Farm, they offer a micro farm program. So why do they do this? This is designed for farms that have up to $350,000 in revenue. So that's for initial year folks. If it's your first year applying for a micro farm, that's the limit. They do allow $400,000 for renewal policies in approved revenue. So what's the difference and why would you be interested in microfarm? It's less restrictive. There's less paperwork and it's more streamlined. So this is for your smaller operations who don't have as much to provide in terms of records and paperwork. So we're able to better streamline this policy for them. So some of those differences, when you're looking at the micro farm, we're only going to have to give 3 years of your tax records. We can include post-production or value-added revenue. There's no replant payment. Like I said, it's more streamlined policy. And it removes that diversification in commodity count calculations that I mentioned previously. So, and I just realized, do we have any questions? Does anyone have any questions so far? No? Okay. So micro farm eligibility, it follows the rules for whole farm revenue. However, you do have those the revenue limits, the 350 or 400K, depending on if you're initial or returning insured. And again, it still has that same no more than 50% of your revenue can come from commodities purchased for resale requirement. So again, it's going to be very similar to whole farm. It's going to cover all your commodities except for timber, forest products, pet, sport, and show animals. And there's truly no difference in terms of that coverage there. So what kind of records would you need and how do claims work? These are very important questions. The first item that I have listed here on this slide is probably the one that is the biggest bottleneck for people choosing to decide to do whole farm revenue or micro farm. Because your whole farm revenue is going to require 5 consecutive years of tax forms. Again, they're looking for that Schedule F. If we can't provide a Schedule F, they're going to be looking for forms that can be turned into a Schedule F. And there are certain requirements if you're new. There are certain guidelines that we can use if you don't have 5 consecutive years, if you meet certain requirements. And remember that micro farm requires the 3 years of tax forms. So whenever you apply for coverage, there's going to be a variety of things that we have to fill out. That whole farm history report, a farm operation report, and growth records. So your whole farm history report is how they look at your historic revenue in order to decide how much coverage you actually qualify for. Your farm operation report is really, we're going to be hammered down the details on how many commodities you grow, diversification discounts, things of that nature. And growth records, which I do get into in a minute of how that applies, because maybe you're starting small and in 5 years you're growing. So your historic average may be lower than what your future average may be because your operation's growing every year. In terms of claims, you really have to notify your agent within 72 hours of discovering you have a potential loss. So what does that really mean? Your claims are going to be filed after your taxes are filed. And so that means we have to get everything filed within 60 days of your IRS submission. And a loss will occur when your revenue to count, and that's based off of when we get your farm operation report and your history report, we determine how much allowable revenue you have. And then from there, we take your policy coverage level to determine your insured revenue. So if your revenue to count as of your tax forms is less than your insured revenue, that's when you're in a loss situation. So allowable revenue.
Katie, we do have one question in the chat.
Shoot.
What determines if your farm is diversified?
Okay, that goes back to the commodity counts, and I'm happy to share a chart with you guys under the whole farm revenue policy that shows how you get your diversification discount. So when we talk about diversification, they apply that as a diversification discount. So depending on the number of commodities you have, they calculate a discount that's applied to your policy when determining your premium. So that that's how diversification comes into play. So basically, more commodities, more commodity count, it's going to affect that diversification discount factor. Does that make sense?
Thank you.
Okay. All right. So allowable revenue. So they really look at two things. They look at market readiness versus post-production operations. Okay, so market readiness is really, you think about it, whenever you plant the crop, you have to move it from the field to make it market ready. Anything that you have to do in that process is normally allowed under allowable revenue. Now, allowable revenue kind of stops when you get into post-production operations. So if you're canning, freezing, or doing any kind of processing to your commodity, that's not going to be included. Under whole farm, however, and I mentioned this earlier, micro farm does allow some post-production operations to be included in allowable revenue. So that again is part of that less restrictive theme that I mentioned that micro farm typically has. So depending on your farm operation, micro farm, may be appealing to you because of that aspect. So I told you that we would talk about growth in a few minutes, and that's where this comes into play. So whole farm revenue does allow operations who are going to be growing over time to increase the amount of allowable revenue. So what do we have to do? We have to show physical expansion. Okay, well, what does that mean? All right, well, are you putting in new infrastructure? Have you purchased more equipment? If you have certain livestock, are you increasing your herd? I mean, there's so many different things that could show physical expansion, but that's mainly what they're looking for. Have you grown anything on your farm? Have you purchased new land? Things like that. So they're really looking to see if you have the potential to produce up to 35% more revenue than your historic average. So if you meet those requirements, they're going to be able to allow you to increase your allowable revenue and your insured coverage, even if your historic average does not support that number. So that's where we have to show that you are physically expanding or you have other infrastructure in place to support that. Now, micro farm also allows approved revenue to be increased, but they look at 5 consecutive years of your revenue history, and the growth of your farm is measured over that period of time for them to determine if the farm is actually growing. So it's a little bit less restrictive. They're using your exact records over 5 years to make those determinations. So I know that if you have a large year of growth, you may be in a situation where you need more revenue than what they're allowing. But for the most part, I think a lot of people find that this is fairly reasonable whenever people are growing their farms. So that to me is whole farm and micro farm in a nutshell. That's the high level view of it. So now, I was hoping that we could go into more in-depth like discussion or questions, whatever you guys had that y'all wanted to discuss. I see that Lydia has shared the whole farm revenue fact sheet. So maybe y'all have had a chance to lay your eyes on that. That is provided by the RMA. That is their language on how the policy works. It's not a long read. It's only 4 pages. So does anyone have any questions? Do y'all want to discuss anything else? Y'all tell me. I'm here to answer.
I also just shared the microfarm program fact sheet as well.
Okay, perfect.
We have a question that came in. Does it cover pest damaged crops?
Okay. So what I'm going to do, and y'all might not be able to see it, but I'm going to reference, I'm going to reference the policy. I have it pulled up. Give me just a minute. And we will look at the causes of loss. Okay. Okay, so let me share this right quick with y'all, the screen that I'm on. Okay, so this is the 2026 whole farm revenue policy provision. So this is what's published by the RMA that tells you all the ins and outs of the policy. So as we can see here, it tells us that it provides against loss of approved revenue due to unavoidable natural causes. And we can see we have adverse weather conditions, which encompasses a lot of things. Fire, insects. So you specifically asked about pests, insects. But there is a catch here. It does not cover damage due to insufficient or improper application of pest control measures. And that goes back to they do look at good farming practices and if you're following good farming practices. So you would have to have done your due diligence to make sure that you tried to have pest control, insect control to the crop. So, and just to continue through these, plant or animal disease, but not damage due to insufficient or improper application or disease control measures, earthquake, volcano. I don't know if that one's Yellowstone, I guess. Failure of the irrigation water supply if caused by an insured peril that occurs during the insurance period. Wildlife, unless control measures have not been taken. What does that mean? If you're like a row crop farmer in the South, you're all too familiar with this. We have a lot of deer and hog damage to farms. So farmers have to get a permit to, to hunt the hog and the deer at night to be able to say that they tried to keep them from taking over the field of the crops. It's a massive problem. So they do have that listed. And so it also does list a decline in the market price. So there's some more language here about carryover insured, carryover losses, if you're a carryover insured and things like that, but we don't have to get into that at the moment unless anyone has any further questions. So I'll turn it back over to y'all. We have any more questions?
Yes. We have a question came in. Can you carry NAP and microfarm?
That's an excellent question. And I believe that you can. I don't think that there are any restrictions on that. And I'm trying to figure out if it would be in this policy or not. There it is right there. Okay, so except as provided, you may obtain other FCIC, Federal Crop Insurance Corporation reinsured policies on your insurable interests unless otherwise specified in the special provisions. So what we would have to do is we could pull the special provisions that are listed for your county under the whole farm revenue policy and make sure that they don't have a restriction listed there. But you should be able to.
All right. Next question was how much does the insurance cost the farmer? Are there estimated rates?
There are not, because like I said, everyone has a different scenario. So there are things that are set in stone. They do know, we already know that, X amount of commodities can give you X amount of a discount. We do know that based off your coverage level, and if you have an underlying multi-peril policy, you could get additional premium discounts. But there is no set way to just ballpark that. It is completely individualized. So if anyone has an idea of how much revenue they could have, I can always try to ballpark a quote based off of that, based off the commodity counts and things like that. So I mean, I'm happy to try to ballpark that data for anyone who wants to contact me, and I'm happy to give you a very preliminary quote. Does that make sense?
Next question was, is there pre-existing conditions cause? Is there also pre-existing condition cause?
So can they tell me a little bit more about what they mean with that? Like, as you remember, I just said some carryover damage could be insured for carryover insureds. But I think that's only going to apply for people who are already existing whole farm customers. But if we're able to get just a little bit more background on that, I'm happy to try and dive into that. And I'll go ahead and pull over that carryover loss data while we find out if we got a little bit more information. Okay, so while we're waiting to see if there's any more data or any more information on that question, I will say maybe this answers that question. If you are carryover insured, natural causes that occurred during the previous insurance period that cause a loss of revenue for the current insurance period will also be covered. But again, that's only for carryover insureds. If you're a first-time insured and you had something happen in the previous year that affects your current year, I don't think that's going to be covered. So I hope that kind of answers what they were looking for there.
Thank you. Yes, and if that was sent in by John. John, if you have an additional question to follow up with that, just send it into the Q&A. Our next question was, can you elaborate more on the reporting, the notifying of the loss in 72 hours versus the payout after taxes?
Yeah, I sure can. So you're going at whatever time it is that you file your taxes, you're going to see how much revenue that you had brought in on your Schedule F. And whenever you see that number and you realize that that is less than the revenue to count, so what your approved revenue is and how much you have covered, when you realize that that's less, that's going to be time to notify your agent. So 72 hours is the common rule, be it any other multi-peril policy. The federal crop insurance program, they want us to be notified within 72 hours of discovery of loss. So at that point, it's going to be when you're filing your taxes and you have them filed and you have that number, you're going to know if you're going to be in a loss situation or not. Does that make sense? And I can also try and pull up more policy language if you want to read exactly what the policy states. You just let me know how you want to handle it. I'm happy to pull it up.
Yeah, I think if you want to send me that policy language, like the link to it, I can send it out in the resources.
I can send you. This is the whole farm policy that I'm reading on, okay. And I also have one for the micro farm, so we can email that out too, so everyone has that.
That would be perfect.
Yep.
The follow-up to that question then was, are we reporting only based on revenue as opposed to the incident?
So here's the thing, and I think my interpretation of what my interpretation of what you're saying is, let's say a hurricane comes through and that's the incident. The hurricane comes through and you obviously have a loss. Under regular crop insurance, where there's underlying coverage available for a multi-peril policy, an adjuster is going to come out and they're going to see the damage in the field, and they're going to make an adjustment on your crop or commodity based off of that at the time of the incident. Now, here is the other thing that a lot of folks have a hard time with when it comes to whole farm revenue is that you were not going to be filing a claim at the exact moment of an incident, because you're only in a claim situation if that revenue is less than your revenue to count, and that's only discovered at tax time. So there is, with whole farm and micro farm, there is a delay between time of incident, when whatever the cause of loss was occurred, and when your claim's actually going to be filed and worked. That's a delay. Sometimes it may not even be until the next year. Does that answer that for y'all?
I think so. And Jamila, if you have a follow-up, just send it into the Q&A. And so the next question was about MPCI coverage, new fruits and vegetables grower. Why would I be denied?
Okay. Repeat that one for me. MPCI, what now?
MPCI coverage, new fruits and vegetables grower. Why would I be denied?
Okay, so is this someone who has previously applied for a fruit or vegetable policy and they got denied?
I think so.
Okay. Couple of things here. One, your multi-peril underlying policies, whole farms the same way, they all work off of actuarial documents provided by the RMA. So what that means is, for every county in Georgia, they have a list of insurable crops. So let's say that you're an apple grower and you're in my county, Toombs County, Georgia. Apples are not an insurable crop in Toombs County, Georgia. So we cannot offer that coverage unless we can get approved for a written agreement. Now, written agreements are submitted to the RMA, and they are not guaranteed. They are a request for coverage. Now, if we do not have 3 years of production history, the chances are high that you will get denied. So that may have been the situation that this particular person is in. And if you had applied for whole farm revenue, it may be because you don't have 5 consecutive years and you don't qualify for any of the workarounds when it comes to not having 5 consecutive years of tax forms. So that's kind of an individual case-by-case basis when denials do occur. But they do in situations such as those. That's not all-encompassing. There are other ones, of course, but those are just a couple of examples of why that could occur.
Great. Thank you.
Yep.
So the next question is a little longer and it's in several parts. So I'm going to ask them separately, but
Okay.
this is regarding the micro farm program.
This is regarding what now? It kind of broke up.
Can
you hear me?
So they are highly diversified, under $350,000. Say they grow 30 crops and have an unavoidable weather event like hurricane winds, and they would be able to claim 3 high dollar crops. You said that they would be able to file a claim after they file a Schedule F.
Yes, so claims do not occur until tax time. Yep. So okay. Not when the incident occurs, but when it comes to tax time. Now, if those crops also have an underlying multi-peril policy, we need to file those when that occurs. But for whole farm and micro farm, strictly tax time.
Okay. And then the second part of the question is, with those 3 crops, those 3 high dollar crops, would they need to be individually listed with gross sales on the Schedule F?
Okay. Now, were you saying that this was for micro farm?
Yes.
Okay. So the commodity counts are not really focused on when it comes to micro farm, because that goes back to the more streamlined, less paperwork are required. Okay. So whenever you're filling out your Schedule F, and y'all tell me if this helps, but I can find a little checklist, and I think I remember seeing one that tells you what parts of the Schedule F we're going to be pulling data off of, and we can send that out to everyone, all the participants. But I don't have that form directly in front of me, so instead of me misspeaking which line numbers, because we know how many line numbers are on Schedule F, I can't pull that from memory without fear of misspeaking. So one of two things: I can try and locate it now, or we can send it out to all the participants afterward that shows which lines that they pull from whenever we're collecting data for a whole farm.
Yeah, let's I can get that link from you and then we can send it
Okay.
out
Yeah.
to
I can send that link in and we can get that sent out for sure. So
yes.
I think that might be more impactful because it's visual anyway, besides me listing out line numbers. So
for sure. And then the third part of this question was they're also wondering about growing in flood zones and flooding damage.
okay, that's a good question. It does say adverse weather conditions. There's nothing on here that specifically, and let me just scan the cause of loss that I'm on right now. There's nothing on here that I can see that automatically excludes. Yeah, I mean, they talk about failure to, this is one thing that pops out in my mind, because golly, it can be anything, right? So failure to follow recognize good farming practices for each insured commodity. I mean, if you're planting somewhere that is likely to result in a failure, I mean, that they could always find a way to bring things back to recognize good farming practices. But really and truly, a lot of the water stuff here in this cause of loss file, it really talks about the failure of the irrigation equipment. And I'm not seeing anything that immediately catches my eye in terms of flood. I've never seen anything. I mean, they talk about a lot of things here: declining market price, things like that, deterioration of commodities. They talk about theft and vandalism, but I'm not seeing anything when it comes to naturally rising floodwaters. So,
Okay. And then follow up to that as well is I think about the previous question about the Schedule F. They said, I guess my question is, how is total crop values determined? Is it self-reported based on an adjuster or based on something else?
so your crop values, there's a little bit of a difference in how that's handled with whole farm and micro farm. Micro farms usually self-reported, and they look at your own records of what you've done over the last 3 to 5 years. Whereas whole farm, they're going to want to see, third-party records. What does that really mean? So in the event that you're a vertically integrated producer, at that point, they want to make sure that, if you're producing the crop in one entity name and you're selling it to another entity that you also own that then resells the crop, they're wanting to make sure that the market prices that you're using to determine your revenue counts for your commodities at that point are actually reflective of market prices. So they're a little bit more strict when it comes to that, in terms of vertically integrated operations. But other than that, I mean, we're going to be getting your farm history and your farm revenue reports. So I really think that'll come pretty easily unless, of course, you're in that position of being a vertically integrated producer, where we may have to do a little bit more legwork in establishing that that is a fair market price that we're assigning to your commodities for your historic averages.
All right. Those are all the questions in the chat so far.
Okay.
If anybody
Well,
has any more questions, please feel free to put them in the Q&A at this time.
The other thing that I wanted to say, I know that I interpreted that water question as naturally rising floodwaters, but I do want to point out that the policy that we're going to send out to people, they do list about water contained in dams and things like that when there's the failure and how that affects them. That language is in the policy. But in terms of naturally rising floodwaters, I'm not seeing anything particular on that. So I just wanted to clarify on that.
Gotcha. All right, one more question has come in.
Yep.
Would sales data support crop prices?
It can. It just depends on the type that it is. Like I said, there's a lot of like case by case and individual scenarios when it comes to these policies. But yes, your sales records are a great place to start.
Great. All right. I'm going to give it a couple more seconds, see if we have any more come in. Okay, I think just a comment. Andrew says, thank you. If you have a reference for fair market values, that would be great. I.e. all specialty crops sold direct to consumer retail. Not sure how that compares to commodity prices.
Yes, in this policy, there is specific language on direct marketing. So yeah, I can definitely pull that language and we can send all that out too. And I will make sure that I break a lot of that down whenever we send it in based off of the questions here. So I think, Lydia, because I might not be able to do that, but if you could take all the questions and send them to me, I could formulate a Q&A spreadsheet, not a spreadsheet, but a PDF, and we can send that out maybe tomorrow or something to all the participants if y'all think that works.
Absolutely. I can definitely send you the list of questions from the Q&A.
Yeah.
All right. I think that might be our last question. So yeah, in closing, I just want to thank you so much, Katy, for sharing your knowledge and expertise with us today. This has been great. And also everybody on the call, I just wanted to let you all know about the monthly virtual office hours that Katy does host to provide one-on-one support to farmers navigating crop insurance options like whole farm revenue protection and the microfarm program. This is a free service. It's offered through the Georgia Organics Climate Smart Farmer Program with support from the USDA Risk Management Agency. I'll also share out that link to sign up for Katy's office hours so you can get that one-on-one support if you need. Also, all the resources we discussed today, we'll get with Katy and get a list compiled. And once the webinar recording is uploaded as well, we'll send that out to you. So thank you all again for your engagement and participation in today's webinar. I hope you guys have a great rest of your week.
Thank you, guys. Appreciate y'all's time.
Thank you, Katy.
Thank you, guys.